suppose you're a 2 contract trader. Is it necessary to take the first scale at 1-to-1 risk reward? No. No, it's not. Um, I am not a fan of R multiple based scale outs. So I don't care if it's I always scale half off at 1-to-1, so I'm in a risk free trade. I kind of hate that. I always scale at 2-to-1. I always scale at 5-to-1. I exit all my position at 6-to-1. I don't like that line of thinking because that is us imposing something on the market. That is us saying, this is what I like. This is what I look for. Market, give me that. Here's, deal or no deal. That's what we're doing. I like to have my scales more dynamic, adjusting for volatility, which yours could as well. Risk reward multiples. If you have a wider stop for wider volatility, you're adjusting your scale out to be bigger as well. So I get that. But just saying I want to come out at 1-to-1. See, if I am I sharing? I don't even know what screen I'm sharing or what's going on. Let me use a whiteboard here. So I don't know why it doesn't let me do that. Okay. If I am 2 different scenarios, let's say I get into 2 different trades that happen at different speeds, okay? And if we want to look at bars, this one might happen like this, okay? And this one might happen like this. Okay, so faster. What does faster typically mean if you're using, whatever type charts? Well, in this one, we could easily work an entry somewhere around here, probably. Therefore, our risk is this big. Okay. Therefore, the 1-to-1 scale out is, I'm just ballparking it, somewhere in here, either the top of this bar or just shortly thereafter. Well, guess what? On this case, we might have to get in up here because we moved away from where we were stalking long so quickly. Therefore, your stop is below the swing unless you want to risk putting it in here and getting taken out more easily. Guess what? Your your reward is above the drawing where I run out of room here. So I think in scenario A here versus B, I think I can squeeze more risk reward. Let's say that this was the prior swing high up here. Well, guess what? I can go for the prior swing high or some other market generated reference, like the other side of DVA, as Luis mentioned, whatever the case may be. And guess what? I could pull 2.25-to-1 on my first scale out because I had a nice small stop. Over here, I'm pulling, 0.7. So I prefer to be dynamic. I prefer to look at what the market's offering and take more where I can and take less where I have to. That is more intelligent trading to me. And maybe intelligence the wrong word, but it's more letting the market tell me what risk reward is available and when and where I want to scale or exit or whatever, whether it's order flow, whether it's patterns, whether it's standard deviations around VWAP, whatever it is. I want to use that information rather than fixing risk reward multiples because I want them or because, whatever. Now, if you go do some kind of like very in-depth back test and you show me the hard data of this is what I'm doing and why, I'm not going to tell you not to do that.